Good morning, good afternoon, and good evening to everyone, depending on where you are signing in from today to the Singapore FinTech Festival. My name is Umair Hamid from Microsoft, and really excited to be having a panel discussion with guests from different fintechs. So I'll just request them for a quick introduction about themselves, their technology, and then we'll take the discussion forward. So maybe start with you, Kenneth.
Hi, thank you so much, Uma, for having me. My name is Kenneth Ham, and I'm the CTO of Handshakes. Handshakes is a data and AI company that leverages on data to empower safe, informed business decisions. We empower clients by delivering meaningful insights, harnessed with reliable data from corporate registries, capital markets, enabling them to make safer, informed decisions. Now, what we do is then to put this information into a graphical representation to be able to find out, how people are related, connections are related, and eventually presenting actionable insights for businesses to then do business safely.
Excellent. John?
Thank you for having me. Very honored to be here. My name is John Rutledge. I'm CEO of Hollywally. We're a white label digital wallet solution, and we provide a platform that allows our customers to quickly create highly customized digital wallets with a number of capabilities that meet their customer needs. And we do that by a large number of back-end integration across payment and payment adjacent service providers. And we overlay that with a large library of white label UX components that are mapped to use cases. And this means that our customers can focus on their business problem and not the complexity of the back-end integrations or creating a user interface.
Excellent. And Oliver?
Hi, my name is Oliver Reich. I'm the CEO of Alpha FinTech. And our mission is that anybody can become a sophisticated merchant acquirer like Stripe and Adyen overnight. So we provide an end-to-end solution where banks can modernize, where current payment service providers that want to become acquirers can quickly cherry-pick solutions and essentially provide them access to any solution provider via one abstraction layer, one reporting view, one operating view, so they can customize easily without occupying their technological or operational resources.
Excellent. Thank you so much, Oliver, John, and Kenneth. Great to have you guys here. It's very interesting in terms of the different technologies that you are kind of bringing to the table here today. And maybe we'll start with Kenneth. Onboarding has been a pretty hot topic of late. A lot of entities are saying that how do we bring the cost down? How do we make it more efficient, more accurate, etc. So would you be able to kind of take us through, what is so special about your technology, right? I mean, there are different tools out there, but, how do you mitigate risk, reduce cost? Because, if you get it wrong, then it's a big liability for the entity, right? So keen to hear your thoughts, please.
Absolutely. So one of the things I think today in industry, when people do KYC, right, onboarding, it's a 7-step lengthy process, right? It goes through multiple steps to ensure that there's certain compliance and regulatory checks in place. And some of these processes are quite complicated in that sense. So how Handshakes comes in is to automate some of this at very fundamental steps of KYC. Although we don't have the capabilities to tackle anti-money laundering, politically exposed person searches, but by integrating with our reliable corporate registry data into businesses' onboarding workflow, businesses can now ensure that clients, merchants complete their application with more accurate and error-free information. We provide the corporate registry and capital market data across Singapore, Malaysia, Vietnam, Hong Kong, and China. Now, this includes corporate insights such as merchant shareholder, directors, beneficiary owners, and this allows us to then open up and unfold shareholder structures, right, producing instant reports in that sense. So with our technology in that sense, we are able to then save time, which actually takes days, weeks in facing complex structures. We are also able to help save companies from making errors by having this process done by the software. On top of that, that also helps them to reduce financial costs and opportunity costs. Now, with our technology, we're able to instantly uncover connections between individuals and corporate entities. Eventually, with this graph representation that we talked about, allow us to then bring actionable insights through people that are related to one another, corporate entities that are related to one another. That brings you a whole breadth of network that I can then find out how these connections related to one another presents its risk or checks that allows them to understand merchants better.
Yeah, excellent. And talking about merchants, and I know, Oliver, you were talking about the ability to kind of allow anybody to start to acquire. there seems to be a tendency in this region, or perhaps a bit of a reluctance on the part of SMEs to kind of go digital and start to, accept digital payments or digital modes of payments. To what extent are you seeing a change in trend or a shift in trend? I know the governments have been trying to push a lot for, digitization of payments, and a big part of that is, how different entities, especially the SME or the SMB sector, embraces that. So are you seeing a shift, and how do you see that evolving?
The challenge with the SMEs in the Asian region previously was that it was still driven by banks. And the banks in Asia Pacific are woefully unprepared. No matter how much they advertise their innovation labs and innovation labs, fact of the matter is, if I'm a SME, I'm basically barely keeping afloat, especially right now in the COVID economy. To now go to a bank and be stuck for weeks in an onboarding process, whether it's KYC, AML, whether it's paperwork and documentation, why? It just makes no sense. So where the SME changes are coming from right now is where a lot of these new fintechs, whether it's not just the Lazadas, the C groups, the marketplaces, but also the Grabs of this world, are focusing on making it easier for them, and that it becomes a seamless experience to quick click on. Merchant acquiring has come back into the foreground because it is really the essence of commerce. It shows where you're shipping, what you're buying, how you're doing it. Are you growing? Are you not growing? Should you go international or not? And it can drive capital requirements. Hey, you're processing X, you can get a loan for Y if you do it right. And this is where the fintechs are making that easier and saying, look, I'm not just going to enable you to go digital, but I'm going to help you to grow your business. The story of going digital was 5 years ago, go online. The story of how you can grow digital, expand and grow your business, that's what is today. And that's why you're seeing also a lot more adoptions from the micro merchants and SMEs, and the growth of marketplaces.
Excellent, excellent. And if we take the other side of the transaction, Oliver, the ability for customers or entities to be offering more modes of payment, really keen to hear how you're finding the evolution of digital wallets, and perhaps maybe a bit of context around Singapore and what they recently announced, the digital wallets to have access to the Pay Now network. To what extent do you see that kind of impacting uptake or demand for digital wallets?
So it depends again on what the infrastructure is going to be that's going to enable that uptick. Again, traditionally, there was a recent study that I saw where 10 years ago, 90% of acquirers and banks dominated the merchant service space was by Boston Consulting Group. And that's fallen to 60% because of these new fintechs that are enabling access to the wallets, to the alternative payment methods. A lot of these wallets and alternative payment methods are nothing new. So buy now, pay later is the big thing that everybody talks about right now. But guess what? Latin America has been doing that for the last 10 years. They don't even understand why it's such a big thing and why is all of a sudden these multi-billion-dollar companies, because there it was people who couldn't pay for things that then utilized and leveraged that. The other trend that's been happening right now is real-time payments. So if I'm an Uber driver, the moment somebody steps out of the car, why don't I get funds into my bank account? So going back into merchant processing and merchant acquiring, evolving into merchant services is, how can I drive my revenue growth? How can I get more money in quicker? The big topic 5 years ago for these payment providers was Alipay. How can I add Alipay? Then, there's Apple Pay, there's Google Pay. Then came buy now, pay later. Now, right now is real time. Then also the enablement of wallets, not for the sake of a wallet, but for the sake of how that'll help me manage my capital and grow my capital. Now, there isn't one winner in this. 2 years from now, it might be that finally Bitcoin is accepted everywhere and that everybody's using it. But the question that everybody has to ask themselves is, how will I be able to switch all of these products on when they're relevant? And it goes back to, especially in Asia Pacific, the banks are woefully unprepared. If it takes you 2 years to add a single new product, and we just discussed half a dozen of them, how are you going to keep up? So the trends are here, and there is no one winner. You have to be able, it's the tail wagging the dog. If you don't have one small payment method, and you might lose 0.5% of your customers, that might not sound like a lot, but if you have 3 payment types right now you've lost 1.5% of revenue that you didn't need to. So the trends are here to stay. More differentiation is going to come. More customization is going to happen. And what is really critical is that users work with partners that provide them this future-proof growth path where they can quickly adapt to these new requirements.
Excellent. Thanks, Oliver. John, keen to get your perspective from a digital wallet issuance perspective. How are you finding the uptake, from the different entities? Are you also seeing non-banks wanting to kind of offer digital wallets, so keen to hear your thoughts from that angle, sir.
Sure. We see both banks and non-banks very eager to capture this space. And the reason is that this is a key part of their customer engagement and where they can create a lot of value. So instead of ceding these capabilities to someone else, they want to capture that and figure out not only how to capture that individual transaction at the end of the purchase flow, but go beyond that and figure out how they can capitalize beyond that transaction and lead to more transactions. And this can be done through different kinds of incentives they're offering. This can be done through different loyalty programs that they're going to entice, as well as building a network of partners that offer these kinds of services. And this was something that was aspirational for us early on. In reality, we had to go out into the market and test it. But it's something that we've seen a lot of interest in terms of all of these entities, we're talking banks and non-banks, looking to provide more services around the payment flow that add value for their customers, and then also are creating new revenue streams and new insights into what their customers want. One of the struggles that we saw before we founded Holly Wally was we worked with over 30 banks and retailers, and they ran into the same three problems. And one of them really was identifying the customer need. And so identifying that and helping to see where the customer sees value is central in determining what kind of payment solutions you're going to put forward and what kind of adjacent technologies you want to surround it with. And so you mentioned the Pay Now network. In my mind, this is going to be highly dependent on the value it brings to the end customer. If the end customer is incentivized to use it, if it's frictionless, if it's easy to use, and they get direct value from it, it's going to be a slam dunk. There's going to be tremendous uptake, and there's going to be a dramatic shift within the payment marketplace. Absent that, it falls the risk of just becoming another payment capability that's available. Either way, long term, I definitely think it's fantastic in that it enables a large number of people to participate in payments seamlessly. But the point remains, is that all of these payment capabilities, all of these methods, whatever you have, ultimately need to bring value to the consumer. They need to be easily used by the consumer. Without that, it's a very difficult path to follow that ultimately a more nimble and visionary competitor is going to edge you out.
Thanks for that, John. I think for that value creation to happen, it's important that banks are able to onboard customers as well. And I know one of the things Oliver mentioned, about Bitcoin and the evolution of that. Kenneth, how are you seeing the onboarding of some of these digital entities, right, or especially crypto-based entities? It's something that a lot of institutions are scratching their head around, and regulators are also evolving. So, keen to hear from you, Kenneth, around, how do you see the onboarding process evolve for such crypto-linked entities?
I think especially for cryptocurrencies and for banks, as we move towards that space, it's a fairly new space where it's hard to then put regulatory compliance in place, or even to say that this is the best onboarding procedures. But at least in today's context, where we come in is to provide at least the checks in place to say, okay, I know who are these people that is relevant to this business. I can actually find out more about making sure that compliance is in place by understanding, are there potential liabilities under these companies? Are there laws that they need to abide to? So I think that's the other part of handshakes where we actually look into conflict of interest, especially for some of this onboarding process. Now, looking at onboarding, businesses need to understand what anti-corruption laws or legislation they need to follow. That allows them to do due diligence process, right? To find out whether are we in compliance before we make a certain business decision as we work and do business with a certain partner. So this is a process that banks need to probably take as the first step, first understanding the market. And looking forward is beyond just checking and making sure that businesses are compliant is also to understand, what are the international news media talking about, this particular cryptocurrency. Because especially when we talk about a lot of these currencies today, they are just evolving so quickly, and people are just coming up with so many new coins. NFTs is coming up right now. How do they play into today's society? How do they play in the whole checks and balances where government agencies, your banks wants to regulate? So this is a hard problem where, especially when we touch on blockchain, cryptocurrency, it's a space that we have to find the fine balance of making sure that regulatory compliance are in checks, but yet at the same time, what's the balance where it doesn't disrupt businesses too greatly, where I'm not able to do certain businesses with my consumers.
Excellent. And Oliver, maybe keen to hear your thoughts on how do you see the evolution of kind of crypto acceptance and kind of merchants or more people being receptive to kind of transact in the crypto space?
It's a little bit of a chicken and the egg issue, in the sense of, for it to succeed, more merchants need to accept it, and for merchants to accept it, they need more people to want to use it as a form of payment. But they're not going to use it as a form of payment unless more merchants are accepting it. If you look back at the evolution, PayPal's turning point as a company was when eBay started accepting that as a payment type, because they had the users. Now they had the users because they were focused on a very X-rated niche vertical at first, and they amassed a lot of users with that. So everything high risk and weird and strange was covered by them. And then all of a sudden, because of this massive user base, it was be able to use that eBay, and then it trained that people can use PayPal via eBay. But the benefit that PayPal then also had was that this perception that, hey, if I use PayPal, I have additional security. I have additional protection and coverage. So the question now, if I'm a user, what is my benefit of using Bitcoin to pay for something, or any cryptocurrency to pay for something? So via Visa and MasterCard, most people do it because they're getting points, or via Visa and MasterCard because I have chargeback protection. So if I'm not getting points, if I'm not getting chargeback and fraud protection, why should I use Bitcoin for payments? Nobody has still explained that to me yet. And now if I am a customer, or if I'm a company, well, why should I accept Bitcoin? Will more people buy? Will more revenue grow from that? Because here's the other thing. The question that somebody will have is, okay, say I accept Bitcoins today and I don't cash it in for 3 days. And next thing you know, the Bitcoin value falls by 50%. Does that mean I have 50% of revenue? So there's no incentive for the users to use it, no benefit. And there's risk with very little benefit on the merchant side to use it, where anybody that has a Bitcoin ultimately will have a Visa and MasterCard in their wallet, ultimately will have a PayPal in their wallet. So I'm not saying it can't happen, but the value proposition is not clear yet on the payment side over, let's say, buy now, pay later, over a real-time payment method, or over something like the regular payment methods that there are.
Excellent. John, would be very keen to hear your views on the evolution of digital wallets vis-a-vis these cryptocurrencies, right? So do you see these digital wallets kind of starting to be used, with crypto-based currencies rather than just, money in the bank account?
To Oliver's point, there's questions around the use case, and there's questions around fluctuations in valuation of the underlying currency. We are seeing a tremendous amount of interest in it. And so a number of banks want to integrate these capabilities, even at this point, if it's only to provide investment type capabilities. And I think that the answer to the chicken and egg problem is going to be thus, is that we need to start small with an MVP type model. And to the point of regulation, this is something that needs to be done under the watchful eye of regulators to ensure proper behavior. And experiment, see what works and see what doesn't work. You need both sides. You need both the issuing and the acquiring side. You need the ability to provide assets on both sides, as well as protections. But by starting small and providing these capabilities that then we can test, pivot, and see what works, I think we're going to get there. And the reason I think that is there is such interest, and it seems to be growing, in providing and accepting cryptocurrency payments, that I think inevitably we're going to find a solution that works. We may not have figured it out yet, the frictionless experience may not be there. The security around fluctuating valuations of the underlying currency may not be there. But these are problems I think that we can solve. And I think that these are things that are going to be addressed as the concepts evolve and as we begin to experiment real time in the marketplace.
And I know we've talked about products, we've talked about capabilities, their evolutions, and some of the problems, John, you touched on, and Oliver and Kenneth. But how do you see technology staying ahead, or at least up to speed with the evolution of these products, right? So is it technology, capabilities, cloud, analytics, and all these kind of solid piece of technology that different entities come out with? Is that what is going to continue to drive innovation in this space? Or do you think at some point even the technology will have to say that, look, the market demands are evolving a lot faster than we can even cope? So maybe Kenneth, get your views. I know you talked a lot about artificial intelligence, etc.
I think very interestingly, I feel that technology is still a catalyst. It's a catalyst, a platform where it makes accessible to customers, merchants, and clients. But the fundamental question I think we talked about, especially when John and Oliver brought up, right? You need to MVP it, you need to test it. Regulatory and compliance have to test and see whether what works. The problem with where we are today, especially when we talk about bring technology in, I mean, we can bring the best technology from all, great minds to build a great platform. But at the end of the day, if it boils down to the fundamentals of processes, how regulatory makes checks, compliance coming in, and we have not solved and uncovered this whole cryptocurrency acceptance in not just Singapore but around the world, you're always going to be one step back. And we can always talk about having the best platform of I have this whole blockchain network, I want adoption, I want people to use this. It will defeat the purpose, because at the end of the day, if we haven't solved what it takes to have good regulatory compliance in checks, right? What it takes to actually adopt cryptocurrency and actually use them in payments. As Oliver mentioned, right, your Visa, your Master today, even your Amex, right? At the end of the day, if I want to adopt cryptocurrency, what does it take in for me? What is my incentive to use a crypto coin to pay for my goods? And if Bitcoin drops, how does it affect my liquidity in that sense? My value drops in that sense. Would I want to then buy with Bitcoin, or would I want to buy something that I know currency is stable? So I think these are questions and conversations that is untouched and untapped on. Technology, I feel, at the end of the day, is still a catalyst that allows us to then tap on these capabilities of data and AI to then churn insights, to then make detection right out of anti-fraud, making sure that we are able to accelerate some processes. But I don't think we're at a stage today to say that I can replace some of these processes entirely with AI, because at the end of the day, AI is still statistical models, and we are predicting based on what we know. But the unknown of having certain behaviors by users, or even by the ecosystem we have today, it's not firmed up enough for AI to then make that prediction and say, oh, I'm ready to do this action and that action.
Excellent. Oliver, your views on the evolution of technology and how you see that as a catalyst, borrowing from Kenneth.
There is a massive evolution/revolution currently happening that is going to change the banking and finance landscape completely. Think about how 10 years ago, everybody, or a lot of people, still used to build their own websites, and then shopping carts came along. And now hardly anybody does that, because it provided companies a platform to launch e-commerce businesses immediately. And how that transformed digital commerce. Think about the API and how easy product access spawned a whole new evolution and revolution after the Adyen's and Stripes. Well, we're going through a similar, even bigger shift right now of platformication. The companies that are pursuing platformication, the Ping Ans of this world, the Alibabas of this world, their market cap has already just crushed everybody, and it's not even comparing to that. But those are the companies that are focusing on themselves. What, for example, Microsoft Azure has smartly seen and evolved in, that the cloud isn't about hosting anymore. Hosting is an afterthought. That was the discussion 5 years ago. Oh, come in the cloud, it's cheaper, it's better. Now the entire conversation has shifted. If you access products through the cloud, you can easier build your own solution. Your total cost of ownership is cheaper. You have better data intelligence. You have faster responsiveness. And hence what you've seen also within that, some early visionaries have said, hey, you know what, that's right. So now we're going to focus on banking as a service, payments as a service, rails as a service, and these infrastructure rails. How that will transform the landscape is that now overnight, embedded finance is sprawling where anybody can start providing payment solutions, loan solutions, card issuing solutions, and where even the banks are now being marginalized into utilities. I will leverage you for your licenses. Just let us design products on top of using your licenses, leveraging the cloud infrastructure, and enabling others to use these elements and components. So even there now, how the new banks are designed is via these solution hubs that allow them to work with hundreds of providers in a much easier fashion. So where the disruption is going to come in, the Fiservs of this world, the FISs of this world will absolutely feel the pain. The old model of just take my technology, get one big license, and here's one huge system, and you have an army of people doing it, is proven not to work anymore. And what banks have done traditionally is, you can't get fired for buying IBM. They used to go with these solution providers, feel great about it, but guess what? They were able to do that because there was no competition on the horizon. So at first they're like, okay, Adyen, Stripe, Square, Shopify, they're taking some of our merchant acquiring volume, who cares? Wait, they're starting to provide loans. Now they're also starting to issue cards. Well, hold on a second. PayPal's market capitalization is $250 billion, 3 times as much as Global Payments, Fiserv, and FIS combined. So they're waking up to seeing that all of a sudden everybody's eating their lunch, and it's not via one large competitor, but death by 1,000 paper cuts. And these 1,000 paper cuts are coming from every corner because access to technology and product is easier. It is cheaper to maintain. You need fewer people. So the entire shift that is happening, you've got a new wave of embedded finance solution providers that are coming because technology and platforms and access to solutions and maintenance off is easier. And you got banks who no longer can be busy admiring the problem, but got to start saying, we got to rethink. Risk is now a different perspective. It is no longer a risk. Shall I choose a young company? They might not have the perfect security layers. Is if I don't do anything, 3 years from now, these guys are eating my lunch. So the shift that is happening currently is fascinating to watch, and it will, as shopping carts transformed websites, as APIs transformed the fintech layer, right now this will change the entire landscape of embedded finance infrastructure and how finance is being provided.
Excellent. And John, finally over to you. How do you see technology kind of evolving vis-a-vis digital wallets and banking?
We see digital technology really being an absolutely core element of everything that's going on here. From a cloud perspective, we're enabling companies to quickly build capabilities that are narrowly focused, test it and deploy it into cloud infrastructure, and scale it to enterprise size very quickly. And to be honest, that's what our business model depends on, is that we're looking to integrate with a large number of those niche providers that have very narrow but very highly confident capabilities, and then combine those into a wallet that we're looking to provide to our partners. If we didn't have cloud platforms like Azure, we wouldn't be able to do that, because you just simply would not be able to build that kind of infrastructure and do that. And beyond hosting, the availability of serverless technologies, of containers, and this sort of thing just adds that value. So it really has gone way beyond just code running in the cloud, and really become tightly integrated with the services and capabilities that exist therein. And to take to the next level, a lot of the machine learning and AI capabilities, again, that are offered by cloud providers such as Azure, are going to be central. Because otherwise, companies such as ours, our emphasis is building these integrations with our back-end providers and providing a superb customer experience on the front end. We don't have those native AI ML capabilities. So being able to take advantage of those capabilities within an Azure platform helps us to build tools that help us understand our customers better and help us understand payment trends. So as we're building out some of these technologies, some of these capabilities, like we're talking about doing MVP payment and acceptance around crypto, these kinds of analytics are going to be central. because otherwise you're driving in the dark with your lights off, and you don't really know that you're heading in the right direction and meeting the customer needs. And that is absolutely critical to make any of this stuff work. And the flip side of that is, as we're going into this area, regulators are totally behind. If we think we're kind of catching up in some respects and figuring out, how this is going to work, regulators are much farther behind. But they're key to making this happen. Because if we introduce a payment, technology or methodology or capability, and consumers get hosed, that's the end of it. Because we've seen how quickly things can go viral on the internet and lead to the explosion or death of a technology. And so having those regulatory guardrails and having that protection for the end consumer is critical. And that's where AI and ML, again, come into effect in providing consumable data, consumable analytics to regulators so they have an appropriate view of what's going on in the marketplace and can react appropriately. And that's where a partnership between startups like ours and regulators is not only necessary but possible. Before cloud technologies and a lot of these services that are integrated within there, never would have happened. You just wouldn't have a prayer, and it would have been left to the big providers, the FIS, the Fiservs, and so forth and so on, to provide these services in this monolithic fashion. And innovation would not be near at the pace that it is today. So without technology, we wouldn't have had the explosion in capabilities and democratization of these services that we have today. And I think that that's going to continue to be a central point in driving and powering innovation going forward. I don't see an alternative to it. The biggest challenge that I see is how these platforms evolve to meet this innovation and keeping a finger on the pulse of what's going on with these startups, what's working and what's failing.
Excellent. I'm just conscious of time, so maybe we'll do a final round of, we've talked about regulations, we've talked about technology and how it continues to be a catalyst, but really keen to hear your views on what is 2.0 for, acquisition, what is 2.0 for payments and onboarding. So maybe, Kenneth, how do you see your technology evolving?
I think especially for our technology here, it's going to evolve much more into having news media industry, capturing news insights around the world. Right? International news is going to power some of these regulatory and compliance checks on top of our technology. And we do see that that's one of the areas that we will move towards to, especially when we want to find out more about a certain company, certain trends, certain economy. And I think especially today when we read a certain news article, how would I know, as I read an article of oil prices dropping due to COVID affects my airline business, affects other industries? And that's one of the pivot, or I would say the short points of where our technology will come in to provide connections to company, individuals, and adding that layer on top of news insights, where as I read, it's no longer about reading your printed or digital news articles today and just finding out what I read is what I get. At the end of the day, it brings out more insights to how is this article now related to an article 4 years ago? How does this incident that happened in this country affects another industry or another company in that sense? So all of these are actually causality relationships that actually brings out more information and insights to one, making a certain decision, whether is it in the market, whether is it in trading, and even moving forward in this whole landscape. That changes a lot into how regulatory and even people make certain decisions as they read some of this.
Excellent, thanks. Oliver, 2.0 for acquisition.
It's gonna be about removing friction, making it easy, and making it accessible. I mean, any topic you read about, whether it's the cloud, whether it's the blockchain, whether it's real-time payments, speed and simplicity reigns supreme. So unless speed and simplicity is the core of your solution, you're not seeing what the market is trending towards.
So John, finally, over to you. What do you see 2.0 in the digital wallet space?
Sure. For us, it really means two things. It means platform and marketplace. From a platform perspective, we want to enable our customers to integrate their services within the platform and create their own capabilities that then they can bring up into their wallet. From a marketplace standpoint, we want to allow them to create those services and provide them to other participants within the Holly Wally ecosystem. So a great example is we're speaking with multiple companies that do remittance, that are looking at wealth management, microfinance. Why not offer them not only a wallet so they can provide their services to end users, but allow those insurtechs, those fintechs, those insurtechs, and so on, who have these great technologies, a broader audience to whom they can market their technologies. And for banks and financial services companies, this means that they have access to some cutting-edge technologies, some cutting-edge services that they wouldn't have had access before. And from a practical standpoint, they really wouldn't be able to build. So they're able to offer a much more rich experience and set of capabilities to their customers. And to the fintechs who are producing these technologies, we're opening new avenues for revenue, new avenues for marketing their products. So no longer are we just taking the cloud and allowing them to expand within their customer segment. We're allowing them to expand across multiple customer segments. And this provides compound value to both the people who are using the technology and the people who are consuming the technology. So that's really where we're going in the next iteration.
Excellent. Thank you so much, Kenneth, John, and Oliver. And from a Microsoft perspective, we are delighted to have been a part of this journey, and we're super excited to continue to support yourselves and many other organizations to ensure that technology continues to be a catalyst for you all. So thank you so much. So thank you, everyone. And we hope you continue to enjoy the rest of the Singapore FinTech Festival. Have a great day.